I'm Max Walker&Williams, and I'm at the London offices of Abrdn, one of the latest governing council members for Hedera Hashgraph. Abrdn is the UK's largest active investment fund, investing in real estate, private markets, fixed income and equities. They turned over £1,456 million last year, generating a very healthy operating profit of £263 million. I have the absolute pleasure of being with Duncan Moir. Duncan graduated at Strathclyde University with a BA Honours in Economics. He then began his career here at Abrdn as a graduate analyst. He quickly excelled and became a senior analyst and then a hedge fund analyst, specialising in Asian markets, strategies, FX hedging and risk. He then went on to become an investment management and then senior investment manager. Today, he is the head of Systematics and runs Systematic Solutions, digital assets and crypto investments. Shane Higdon, CEO of the Hbar Foundation, describes Duncan to me as a class act and an excellent executive. Duncan, thank you so much for taking the time to speak with me today.
Thank you for having me.
How are you?
I'm great, actually. Yeah.
Yeah, so Shane speaks very highly of you, doesn't he?
Yeah, that's news, but yeah, that's nice to hear.
Yeah, and do you know him well? You must work closely together.
Yeah, and I guess we catch up at least once a month, just to talk about what we can do to kind of further Hedera.
Oh, perfect. Yeah. Anything in the pipeline that you can talk about, or?
We're working on a range of things, but we're really trying to, I think, dial in a framework to go and build use cases on Hedera outside of the council members.
Right. Okay. And what does that framework look like? What does that mean in real terms?
It's early days, but what I think we need to do is really focus on pulling in relevant stakeholders that are crucial to a new use case. So, we right now we talk a lot about the council members and their use cases, but it's difficult to do something in isolation. You really need to work with a lot of third parties. And so you want to focus on that very specific theme that Hedera is targeting, be it on-chain finance, be it sustainability, and look at the key players that are needed to bring a real use case to life.
People are really interested about the human beings behind governing council members, and it's always nice to have a little bit of that human element. So can you tell us a little bit about yourself, your background?
Yeah, well, I don't need to run through my LinkedIn, but I grew up in a small island in Scotland, and made my way down to London, and as you said, started my career at Abrdn, and it's just grown from there. So investing in hedge funds, building multi-asset portfolios took me on this innovation journey that ended up in digital assets. And I guess hedge funds are early adopters of a lot of different asset classes, crypto being one, and that was a good introduction. Yeah,
it's an exciting time, I guess, with crypto and AI and that sort of thing going on. It's like a real good time to be alive.
It's there is a lot going on, and it feels like things are really accelerating, particularly in traditional kind of finance, traditional asset managers who maybe, let's say, are a little slower to adopt these new things. I feel like there's a huge amount of activity within Abrdn, and I see it across our peers.
Right. Okay. And how did the relationship between Abrdn and Hedera? How did that come about? Were you the driving force behind that, or?
I think I would say one of several people within the business who were helping to shape a formal digital asset strategy for Abrdn, and part of that was tokenization. And through relationships with Archax, I'm sure we'll talk about in it later, and DLA Piper Toko, then got introduced to Hedera. We really made that decision to build on Hedera, to do tokenization on Hedera, and the council membership came later. It wasn't the driver for us to use Hedera. We'd already made that decision.
Right, okay. I thought you'd seen one of my YouTube videos and thought, wow, that looks fantastic. I want a piece of that.
We can edit and I can say that.
Cool. Yeah. With AI, I can get you to say it anyway.
Oh, that's true.
So I've heard from many stakeholders at Hedera that you are one of the most active governing council members. What's it like? What's the role like as a governing council member on Hedera for you? What does that involve?
Yeah, for me, look, I think for everybody, it's you get out what you put in, and it's not a small thing for a large traditional finance asset manager to be this involved with a DLT. And so, because we've made that commitment, I want to show the commitment we have made to Hedera. So it's a lot of a lot of governance, a lot of meetings committee meetings on a range of things, new membership, use cases, finance, and working with my colleagues and the other council members.
But that's interesting, isn't it? Because you get to meet all walks of life,
Amazing.
different industries.
There are actually very few financial services council members on the council, and no other asset managers like us. So we get to interact with technology companies and engineering, industrials, aviation, these things which are sectors that we don't normally kind of interact with.
That's really good, isn't it then? So from a business point of view, your personal sort of progression and also for Hedera too. Yeah. Because there's potential of cross-pollination with use cases and that sort of thing.
Completely. I mean, some of the main use cases for Hedera are some of the main themes such as sustainability, digital identity. They work across all of these sectors. They're relevant to all the council members, and we're all contributing kind of different ideas into how you can make tweaks to improve.
More efficient systems.
Yeah,
that's amazing, and that's exactly what Hedera is built to do. Effectively, that's fantastic. So, does Abrdn have a use case at the moment on Hedera?
Yeah. So, like our main use case is tokenization, and I guess that's what that would be the same for a lot of asset managers. Archak's a portfolio company of Abrdn, who are a UK regulated digital securities exchange, crypto exchange and custodian, tokenized their investment in our money market fund probably 4 or 5 weeks ago. Let's say we have a distribution agreement with them to allow them to go and sell that, so that they can offer tokenized money markets in sterling and soon in dollar and euro to investors through their venue.
Okay.
And we're going to expand that, and we're going to do true securitization as well, where tokens on our mutual funds will trade on a secondary market basis through regulated exchanges.
Okay, so can you explain that a little bit more? Just delve in sort of layman terms.
Yeah.
What does that mean in real life terms?
Yeah,
so
sure.
What's it look like?
So today, I would say institutional investors, large institutional investors, whom Abrdn serves predominantly, have access to the best opportunities in the world. They've got the liquid markets, equities and bonds and FX and commodities, but they can also invest in private equity and real estate, infrastructure, all these asset classes. Smaller institutional investors and individual investors cannot get access to all of these opportunities, because the ticket sizes the minimum ticket sizes are too big, because the liquidity is not right for them. So there might be private equity funds that require 5, 10, 15, 20 million minimum tickets. Not everyone's got that rattling around. Even the small institutional investors don't necessarily have that as to allocate with, and maybe they don't like the idea of a 10-year lockup. So what we can do is take, let's just use private equity because it's a simple example. Take a private equity fund and tokenize it, put it onto a secondary market. It's fractionalized, so instead of $10 million, per ticket, you could have 10 million $1 tickets, right? So,
right. But the returns are the same, relatively.
Yeah, exactly. I if I had to think, probably the smaller the fractions are, there may be a premium to buy in at that, but I think you're still delivering a very good outcome to the investor, because they're getting something they just wouldn't have got in their portfolio, and now they have a secondary market to trade it on, so the liquidity aspect is less relevant.
Wow, that's really interesting. So, and that went live. That's live now.
So the money, yeah. So exactly. So the money market tokens are available through Archex's platform as of last week.
Okay.
Available to investors connecting into them.
So if people watching this are interested in buying one of these £1 tickets, and I know that was just an example, where do they go to do that?
Well, there are very few venues today. I mean, Archex would be one of those for people that are able to connect. We are working with regulated venues, so this is where it becomes more complicated. You have a few dotted around the place across the world. The problem is not right now the venues. It's actually the content for that. There's just not enough tokenization.
Right. Okay.
If you're anyone really, but let's say you're a sophisticated investor, do you want to go and onboard some new platform and go through all the KYC and all that for one investment? Probably not. So I think what we need is more content, more offerings available to bring in more people, to make it more relevant.
Right, you need it to look more like the stock market with plenty of options and different things to do.
Yeah,
you need a menu in order for people to jump through the hoops of KYC and that sort of thing.
Yeah.
Do you think KYC and know your customer and the regulation is required if the whole point of this is that it's the individual on the street and it's £1 tickets?
Yeah. So in some cases, it will not always be the individual on the street, and that will be determined by the regulatory environment. So to get into not to get into the regulation in too fine a detail, but if you have a private equity fund that is deemed only suitable for professional investors or sophisticated investors, depending on the classification, and you tokenize it, it can still only be sold, in the UK at least, to sophisticated or professional investors.
Right, okay.
But those investors can access it at a smaller size and with liquidity. The next step, I think, that has to happen is regulatory engagement, where in the UK, again, we have a same risk, same regulatory outcome principle. If the risk was based on the illiquidity and you make it liquid, the risk level is lower, and it should be offered to individual investors. And we already are seeing moves in the UK to offer these types of less liquid investments to retail investors. We have the LTIFs, for example.
That's so interesting how that's going to evolve and where it will land in that regulatory framework.
Yeah.
Do you require Hbar to facilitate your use case?
Ultimately, yes, both for the production and for the purchase, but like with most venues, you're able to cross trade. So, but yes, for the token creation and issuance. Yeah.
Something that's really something that's really seems to be of interest to people that I engage with in the crypto space, particularly on Twitter, is how large institutions, governing council members, when they have a use case that does require Hbar to facilitate that, how they'll manage that. In general, how do large companies operate? Do they see it as like a cotton mill buying a load of stock? Yeah. Do they buy a load of Hbars to try and hedge against price inflation in the future, or do they just buy it as and when is needed? Generally speaking.
No, it's a good question. So, first on the issue of how do they go about actually developing a live use case, I would say, and this is not just council members that have this issue. I think enterprises in general across all DLTs will have the problem. That's why you see so much being done on private blockchains, is the ability to buy and hold the native digital asset. For most corporates, they hold money with a bank, And so when they do their procurement, their finance department, or the FD or whoever goes and gets a new bank account, what are they going to do for cryptocurrencies? For an asset manager, it's a bit easier. I'd say the hurdle is lower because we are very used to appointing custodians to hold our assets and our clients' assets. So we can appoint a regulated crypto custodian, such as our checks, to do that for us. And I think the corporates in other sectors need to maybe come around to more that way of thinking. You can't just go to US Bank and hold it there.
No.
And do we go and buy up now? No. But let's not forget that the wonderful thing about Hedera is that the transaction costs are pegged in dollars to dollars. So
and fixed.
Yeah, and so as Hbar becomes more expensive, then the number you need to do your kind of for your use case decreases.
But so does there is the opportunity that I completely understand, and this is a thing that gets quite confusing in some spaces, is that because you pay in Hbar, but the price is in dollars and fixed, people seem to believe that it might be in the governing council members' interests to suppress the price of Hbar.
Well, I mean, first of all, I guess the Hedera Hashgraph LLC and the governing council are not specifically concerned with influencing the price of Hbar at all, actually. And it's not something that comes up in our discussions at all. If I take the other side of that argument, a lot of liabilities from Hedera are paid in Hbar and priced in dollars. So in that case, it would work in its favour if Hbar was higher.
Yeah,
right?
And also there's a security element as well. The higher the price, the more secure the network.
Yeah, absolutely. You want to encourage adoption and staking eventually to secure the network.
Yeah. A lot of people in the crypto space from all different DLTs believe that any day now, the Bank of England, the Fed are going to announce that they're moving their whole monetary system, lock, stock and barrel, onto one cryptographic platform or another. I just can't envisage a world where they hand over control of their systems to a DLT. What do you think? Is that a possibility?
I think I'm on your side there. I think it's hard to see it. What we're probably going to see next, we are already seeing this with, at least through discussions and applications, is the ability for companies to create stable coins or digital fiat, where they're backed by assets held with central banks. I think that's highly likely. I think we have seen some use cases in the UK and potentially in the US as well, where you would have the Bank of England or the Fed store the collateral, which is basically the fiat, and you have tokens that represent that. That will be really useful for institutions like us, when as a business we want to trade digital securities in the future.
Right.
Even if those securities are, I don't know, the Vodafone share, or tokenized, we need a settlement mechanism. We need a cash side to do that.
To balance it, yeah. And might that be on one of the DLTs, or would it be a sort of private network off the technology, or how do you think this plays out?
Okay, so different groups are different, or have different frameworks. We are seeing private networks being built, and that's of course gaining traction with the regulator, with the central banks, because it's much easier to understand, and you have fewer things to worry about from a risk perspective. But of course, with the public stable coins, I think there is going to be a place for them. I don't necessarily know that it's going to be in trading or using a settlement mechanism for institutional money. But with more than 50% of assets or liquid assets traded expected to be moved to retail, does that even matter. I think there's enough activity for both to exist.
Okay, and interestingly, FedNow just announced, haven't they?
Yeah.
Can you talk about that a little bit? Explain what's happening.
Probably not.
Right. Okay. Okay. Fair enough. So, does Abrdn as an institution have, because you invest in crypto businesses, presumably crypto assets themselves, does Abrdn have exposure to Hbar in its portfolio?
So we are just in the process of appointing our custodian, actually, to allow us, of course, because we run a node, we can receive Hbar.
Yeah.
And so we're in the process of appointing a custodian to do that. And that will be the main use right now.
Really?
Yeah.
Okay. Okay, so do you see a time where Abrdn's offering its clients exposure to various crypto projects as a diverse portfolio, as part of their diverse portfolio, just a standalone investment?
Yeah, I mean, I think it's not right now today, but I think there will be a time when we see that, because today, cryptocurrencies, digital assets of proof of stake could be really seen as a venture style investment. You don't know who the winner is going to be, but they are investments in technology. And we really believe that DLT will be a technology that drives a lot of future innovation. So investors are going to want to have some exposure to that.
It's an interesting point you raised there. Do you think that we will see in the future, if you consider that, forget crypto for a second and just consider that Hedera or any other platform is a business that has a software, do you think there'll be a time when companies, institutions, LLCs like Hedera become PLCs, and you can actually buy shares in Hedera itself?
Yeah, it's a really, I think we could probably talk about that for a while. Obviously, there's an issue right now with are digital asset securities, are they not? In the case if they became a listed PLC with an equity, I think is what you would see. We are seeing groups building networks, private networks, with what seems like a view to doing that. And ultimately, you have a business which has cash flows, has transaction fees, it has operating costs, it can return capital or pay out to people that hold the native crypto.
It's a software business.
It's
like any other software business.
It looks very similar.
Yeah. So do you think that will happen? Not with Hedera specifically, but do you think you'll start to see that?
I think it makes sense. I think you'll probably see a lot of groups develop their own solutions internally, like probably consultants and other technology companies, and potentially spin those out into separate businesses.
That's really interesting, because then there's another facet to the whole investment picture.
Yeah, completely.
Yeah, really interesting. So the staking rewards have just been reduced from 7.5% to 2.5%, and I saw that the governing council voted for that, and the vote was unanimous. Yeah. So by deduction, you voted for that.
Yes.
Why?
So, we had a huge amount of debate around this, several months of work. I think we probably did 2 to 3 meetings a week.
A week?
Week. Yeah. Two, at least 2 scheduled meetings a week.
Wow.
For the last few months on this, because it's an important topic. I think, why did I vote? To me, it speaks to sustainability as a business sustainability continuity in the future. We know that the people and businesses building on Hedera are thinking very long term about their businesses, and it's important that Hedera operates with that mindset as well. So we've got to think very long term and make sure that we can focus on the business continuity aspect.
Okay, so what in effect then? So from going from 7.5% to 2.5%, it makes Hedera more sustainable and therefore protects its future. Yeah, is effectively what you're saying.
Yeah, but you basically have the option now. So you less impact on treasury, and the something where you would get to anyway, and everybody else will get to this if they survive as DLTs, where it's much more in line with the revenues that are being generated on the network.
Yes.
And then the great thing is that the ones that do, the winners in this, will take larger market shares and the revenues will grow.
Yes. Okay, so I understand why you all voted as you did now, and thank you for that, because I think the transparency there is really important. But why do you think the question was proposed now? Why make that reduction down to 2.5% now?
Yeah, I mean, there's nothing in particular. It's really just part of the roadmap and the council members working with the Hedera staff to think about the future.
Okay. And with your hedge fund analyst hat on, what do you think of the tokenomics of Hedera?
I think about this a lot. So yeah, I mean, this is the sort of thing that any hedge fund really looks at, but let's say the crypto specific ones will think about. And for me, what they're going to see is, because they're thinking about the reward, but also how long is that reward going to be maintained. For me, they're seeing, I would hope, a business that's set up for long-term sustainability.
Yeah. Okay.
Yeah.
I'm not going to bother asking you about the price of Hbar and all that sort of stuff, because it's a waste of the viewers' time, it's a waste of your time and mine. There's things you can answer and there's things you simply can't, and everyone gets that. But in generalities, do you believe that Hbar as it sits today is undervalued?
Yeah, that's a big question. I think it's hard to say whether it's. This comes back to the topic of, this is almost like venture style investing, where valuations become they're possible, but become very difficult, and the numbers get very, very big. So I don't know. I couldn't honestly say if it's under or overvalued. I don't feel that it will be at the same price today as it will be in a year's time. I can only say that, or even tomorrow. I can say that.
What a great answer!
Yeah.
Or by the end of that sentence. Yeah, what a great answer. Yeah. So for certainty, it's not going to be the same price as it is now. That's a great answer, by the way. Who would you like to see? And this is a personal question to yourself. And other governing council members have made it very clear that this is your personal opinion. This isn't, Abrdn. But is there anyone, as a fan of, you'd like to see as a governing council member come on? Because there's not many seats left. So,
yeah.
Are there any industry or specific businesses, for example, that you'd want to see on the governing council with you?
I think it wouldn't hurt to have another peer. Like a lot of, in our world, we can be very protective and, we like a bit of competition. So we maybe don't like to let our competitors in on things. But I think we're at such a early stage here. It may help to have another asset management firm on the council, certainly to allow us to work on use cases together.
How would that help?
Because part of our challenge and we talked about tokenization, and that it's relevant there, but also in the other things we're working on, such as bringing our mutual fund operating models on chain. Part of that is working with third-party service providers, groups that are not council members, groups that are not necessarily set up today to deal with on-chain solutions, and our competitors use the same service providers. So the more groups that you have, more clients of those that you have asking and pushing for change, the quicker that change will come.
Yeah, okay. So strength in numbers.
Yeah, absolutely. And then, the other area which I think is really interesting for DLT, nothing to do with finance, but it is healthcare. I really think that there's a place for DLT in healthcare, particularly around data, customer or patient data, and that traveling cross-border or even to different, a different hospital or a different clinic, and the protection of that is, I think DLT would be perfect. So a council member in that area, I think, would be great.
I completely agree with that, actually, and we've seen a little bit of it. I think it was a year or maybe a couple of years ago now. The NHS were tracking COVID vaccine temperatures in transit.
Yeah,
and that just goes to show that what a fantastic use case, because they can't spoil, and you need to be able to track them instantly, and loads of data points. And there's so much information. How do you make that scalable?
Yeah.
And then there's so many different ways as well that you can layer that, and things can feed into each other with the data reports of people's health.
Yeah.
Very interesting.
Yeah.
How many transactions, of course you can't see the future, but just kind of understanding markets, understanding uses, understanding early adopters, and that whole cycle. In your opinion, where do you see Hedera in a year's time, 2 years' time, potentially, in terms of transactions per second?
Yeah, I think we can. Obviously, the big, success on Hedera today is, well, as of today is Atma, and I think we can probably see another one of those at some point with the amount of activity there is and the things being worked on. For my own part, the tokenization story, while huge, potentially absolutely massive, it will be a multi-year story, and the impact on TPS will take time. It really will. If you tokenize one single fund, you need a lot of transactions you need a lot of activity to kind of compete with the existing use cases. But once it gets to scale, it's going to be huge.
Yeah.
You talk about trillions of dollars tokenized, and individuals and institutions trading on those, I think is potentially massive.
Can you explain, if you can, and I'm sure you can, where does the value, because we're so early in the crypto space, where does the value of a project come from? Because I'm mystified sometimes, and I know other people are frustrated and mystified too. You see projects that have no real inherent value, intrinsic value. They have no real world use case. Maybe the answer is the greater fool theory, you tell me, but we see projects that are a nonsense effectively, with token prices, double digits, triple, and even 4-digit valuations per token. And then you see platforms that have incredible potential, use cases, transactions in the pennies. Why is there that disconnect, and where does that value come from, or lack of value?
Yeah. Okay. So that's a good point. I think the price also depends on how many tokens you have issued. So you got to look. Yeah. So you think about the total market. You got to think about the total market value of the project. I don't know. I think it can partly come down just to the approach that certain groups have taken to marketing, and the type of customer that they want to market to. Again, this probably speaks to the sensible side of Hedera, which I think is the right approach. That they are targeting enterprise because they know that long-term enterprise will mean it's where the activity is going to come from long term. And when people look back and see who did things right and who did things not as sensibly, I think they will work in Hedera's favour.
I completely agree with everything you've said, except it doesn't, and this is the really strange thing, it doesn't always depend on how many tokens. Ethereum is deflationary, but it's technically unlimited supply.
Yeah.
Doge has an unlimited supply.
Yeah.
So they have an unlimited supply,
That's true.
and the token price has been, with Ethereum, what, $4,000?
Yeah.
So the market cap is technically all infinite.
Yeah.
Infinite plus one. So
that's a good point, and the inflationary part helps a lot with the staking, with the rewards as well, right? That I think it's a difficult one, but this probably just comes back to the fact that it's such early days that whether something's inflationary or deflationary, or neither now, is people are not factoring in a lot, because if you value any of these companies, sorry, I will call them companies, but yes, the companies to me, numbers are going to be, out of this world. Can be, like the multiples are going to be out of this world. If you try
and fit what currently we have into any other kind of analytic model, it makes Tesla look cheap. Yes.
But that just shows. But this is not like Tesla today. This is like Tesla, or any growth company, pre-IPO, or early stage. We've got to remember that's where it is. They just happen to raise capital in a public market.
Yes, it's such an interest. When you put it in that context, it really is quite exciting, isn't it?
Yeah. It explains a lot why volatility of these assets is 80-90% per annum.
And what's the kind of very rough timescales of when that we move into the next phase, and that kind of some of the stuff that probably shouldn't survive doesn't?
So I think if you're not if you have high rewards and you haven't got that inflationary part to kind of help with that, I think long term that we're probably going to see. Well, we'll need to see groups adjust. I mean, you just got to assume they're going to adjust. But I think that the phase that the valuations start to look more reasonable is when we do see some really big use cases with some decent revenues being generated. I don't think we're that far away from it. But I think it probably might not even come from within financial services. I think it's going to come from kind of some of the other sectors that have much higher, frequency of, let's say, data being processed.
Transactions, effectively.
Yeah, transactions.
Yeah, that's where it'll start to count.
Yeah.
Because at the moment, there does seem to be a disconnect between transactions per second and value. Because, for the reasons we just discussed.
Because Hedera is the highest, I suppose.
By some margin.
Absolutely. And
that should be one of the fundamental metrics.
It should be, but perhaps what we need is some more. I'm not going to say institutional because it's not fair, because there are a lot of very, very good retail investors out there, but more rational money come into the space that can actually see these as companies that they can value, who
don't just look at the shiny colours and the sort of who's in charge, the Elon Musks of the space, if you like, and just pick the one they like because it's got a picture of a dog or whatever. But people actually analyse and look at it.
Exactly.
Elon Musk said on a Twitter Spaces, or X as it's now called, that he confirmed that they're going to be doing different versions of financial services, so perhaps peer-to-peer payments, for example. It was in a XRP centric Spaces, and he was talking about this, and then the interviewer asked him which platform he'd be using, if he would be creating his own, and he confirmed definitely that he won't be creating his own. He confirmed that Doge isn't ready yet, which I think is a polite way of saying it might never be. He said that Bitcoin can't scale, and that the Lightning Network is a joke. That's a direct quote from him. He said that and laughed quite hard about it. The Lightning Network is a joke. And then he said XRP might be the only solution for his peer-to-peer payment at scale on X. And obviously, as listening to this as somebody who's interested in Hedera, I know that not to be the case. And so I guess the question is, what role does the governing council play, if any, in helping expand Hedera's and knowledge of Hedera? Because to get the attention of Elon Musk, I'm not going to be able to do that, unfortunately, anytime soon. But Google, IBM, LG, and indeed Abrdn could probably get him on the phone. So how do the GCA have a role to play in that? Are they responsible for that, do you think?
No, I think.
Or should they be?
Whether we have an official responsibility, no. But I mean, I think we feel that we have this responsibility to kind of spread the word and to help other companies and regulators, industry bodies engage with Hedera. So absolutely, whether it's the governing council or the board, certainly the ecosystem partners, this is something that comes up a lot, and we do. You will see. You saw for example, the work that we've done with the Commonwealth Group of Nations. Probably like a couple months ago. These are great examples. This is a third party that council members have got together along with Hedera staff to talk about problems and potential solutions that involve Hedera. Okay,
and equally recently, PayPal have announced that they're going to be offering a stablecoin, and they're going to be doing it on the Ethereum network. And as a fan of the as a fan of the technology and of the planet, from an environmental standpoint, and for being a huge advocate and fan of efficiency, it makes no sense to me. And it doesn't have to be Hedera necessarily. I'd like it to be, but it doesn't have to be. Why do you think they would choose Ethereum of all things? Because they might just. Me thinking to myself, I think, well, maybe they haven't heard of Hedera, which is a very reasonable thing. I'd like to think that they do massive research before committing to anything. So you'd like to think they've heard of Hedera, but maybe they haven't. But there's no way they haven't heard of Ripple and XRP. So why choose Ethereum?
Yeah, I can only assume it's just because of the adoption and the infrastructure support for ETH and ERC20. Like, I think this we see this a lot, right?
Yeah.
You say, well, why that chain, not this, why not Hedera? And a lot of people, it's just easier just to go with what's popular. What's been popular today.
Yeah, but I'm just going to press a little bit on that, because a lot of the companies that we're talking about, including the governing council members, they didn't get to where they are by doing necessarily the easiest thing. They did the smartest thing, the most efficient thing, and they're not famous for really cutting corners, if you like. I'm not saying you said that, but this is PayPal. So I just find it hard to believe that it's just because it's easier that they chose Ethereum, because it's so inefficient in terms of gas fees.
No, it is. I guess that one of the great things about PayPal is their connectivity with all other platforms. And if you think you want to maximize that early on, what is more adopted than and supported than Ethereum?
Yes, but the people using it might not even know that. They won't even know it's on Ethereum.
They won't, but if they don't have to deal with somebody accepting or not accepting their PayPal coin.
Okay, yeah, fair enough. For me personally, I just see it as you have a PayPal account, I have a PayPal account. I want to send you a PayPal token. The fact that it's on Hedera and super efficient and environmentally friendly is all great for PayPal, but I don't care, because I'm not sending you Hedera as far as I'm concerned. I'm sending you a PayPal token. The fact that I'm on PayPal and want to send you money means that you need to be on PayPal anyway. So if you're on PayPal, you're also facilitating on Hedera without even knowing it. So I genuinely can't arrive at a reasonable conclusion as to why they would choose Ethereum. I just can't make sense of it.
The cynical explanation might be just that they did their POC in ETH because they could just do a private POC, and then they just thought, well.
What does POC stand for?
Oh, proof of concept, sorry.
Right. That's okay. No. So they did their proof of concept. Somebody chose ETH because it's easy peasy, it's well known, and everybody's heard of it. Yeah, okay. It could be as simple as that, you think?
Yeah, I mean, I'm guessing now.
Okay. The reason I ask is because you have exposure to these and work in one of these huge companies. So you might know how decisions are made, maybe that might have meant they arrived at Ethereum. There might be a compliance thing that I wouldn't have even considered or something.
It's definitely a step away from our business, but if I can think about other examples closer where we've had these discussions, it can honestly come down to as simple as we spoke to these guys first. That
happens in big companies.
Yeah. Of course, they build a use case, they build a thesis, and get internal buy-in. It can be really as simple as we spoke to XYZ, chain first, or in some cases, unfortunately, particularly with US banks, they feel either they are compelled or they feel compelled to stick with private networks as well.
Yeah. Okay, so I appreciate your time so much, Duncan, and I know that you're incredibly busy. So is there anything else you want to discuss or talk about or say to anybody before we get to the quick-fire questions?
I don't have anything, no agenda, but like what I would just say is kind of reiterate the benefits that we've seen from joining the council and working with all the different council members. We see a huge amount of work going in there, and a lot of groups trying to work through their different use cases, and it's just really exciting to see all the different ideas. I'm on, I attend one of the committees, CorpCom. It's a use case committee, all the different presentations every 2 weeks of the things going on in there. It's really exciting. It's
really good to hear. Yeah. It's really good to hear. And I hear very similar things from all different governing council members who have their own sort of projects that they're working on, but also they're excited about other things that they see in their ecosystem. And it's really refreshing to see such big businesses coming together in various ways and bringing their expertise, be it academia, UCL and LSE. That was amazing too. Okay, so a couple of quick fire questions. Are you going to Davos next year?
Most likely not at Davos, but might be nearby. Yeah.
Right, okay.
Yeah.
So you're going skiing but not attending?
That'd be nice. But I'm working.
Right, okay, so you're working nearby.
Yeah,
so you're watching from a distance.
There's some other things going on around the same time, yeah.
Right, okay. Yeah. That's a very cool answer. Is the price of Bitcoin more likely to go to $1 million per Bitcoin or zero?
If I had to choose, gun to my head, sorry, I would be a zero.
Really?
Yeah.
Okay, that's interesting.
Yeah.
Okay, you don't have to explain why. Okay. It's a quick fire questions, but that's a very interesting answer. We're going to have to pick up on that next time when you're near Davos, hopefully. When the industry matures, is Hedera a top 30, top 20, top 10, top 5? Where do you see it? Where's its natural home once everything settles?
I think it's a top 5. I mean, we wouldn't have gone with Hedera if we didn't genuinely believe it was going to be one of the winners, and I think it's setting itself up really well for that. To
be in the top 5?
Yeah.
Wow. And final question, is there, and this is a personal question, is there a use case that you'd like to see come on Hedera? Whether it's in development or not, is there just something very specific use case that you'd like to see on Hedera?
Yeah, I mean, for me, it's the healthcare one. You know, it's patient data on chain, secure, accessible only, and actually, most importantly, owned by the individual who has that data. It's the most sensitive data you can have, and you don't own it. It's stored somewhere else. I think that would be a really, really cool one.
I couldn't agree more. Yeah. Duncan, thank you so much for your time. It's an absolute pleasure. Thank you.
Cheers.
Okay, guys, that was amazing. It's really, really nice to have a really open and honest conversation with the Governing Council member of Hedera Hashgraph, and Duncan's been one of my favourite interviews so far. I hope you enjoyed this. If you've got any questions, feedback or comments, please leave them in the comments below. And as always, I'll see you soon.